Why IT stocks falling though the US dollar strengthen? And no, Bangalore underwater is not the reason for it. The Indian market is dominated by IT service providers. We are world's service industry just like how China is a manufacturing one. And in both cases, we earn in dollars. So if Indian tech giants serve their Western clients and receive payment in dollar, why is the IT sector falling? We know that the dollar has gone up very well in the past 6 months. In fact, the dollar exchange rate is at an all-time high. So dollar earning companies should do well, right? Hello everyone, I'm Rakshith and in this video, let's discuss what could be the reason for Indian IT sector to fall. Introduction to Indian IT. The Indian IT sector is vast and a lucrative business. IT accounts for more than 8% of country's GDP. Indian IT companies provide IT services, consulting, and most importantly, outsourcing services. As a global information technology hub, Indian IT became as big as it is today because of our young population, low cost labor, work experience, and a good relation with our Western partners. Hence, our IT export revenue is at least 3 times the size of domestic revenue. Look, basically, each country has its own expertise in their field, be it due to the demographics, the location they are in, or some other reason. And we cannot dominate in that market. For example, it's very difficult to compete in the Chinese manufacturing market, just as with the Bangladeshi textile and the Taiwan semiconductor market. Similarly, India's IT is one of the best in the world. Why Indian IT falling? The Nifty IT index has fallen by over 30% in the past year, wherein individual stocks have fallen more by as much as 40%. So the question is, if Indian IT companies make most of their earnings, almost 3/4 of the revenue, from Western partners such as the US, UK and other European countries, and since the US dollar itself has strengthened so much, shouldn't Indian IT companies be making hefty profits? Well, the answer to the question lies in the fact that the Western countries on whom Indian IT sector depends are not doing well economically. Our Western partners experienced some of the most significant price increase in the recent history. If they are not doing well, how can our IT industry, which is 3/4 dependent on them, earn, right? The reason is supply side pressure and falling demand, as well as macroeconomic factors in the West such as rising interest rates have all contributed to the stock market's decline, especially in the IT companies. It is also due to high employee turnover, or as we call it, the attrition rate. High valuation of international currencies, particularly the US dollar and the euro, and selling by overseas institutional investors, which is the FIIs, has triggered the market correction. Conclusion. Indian information technology companies often get paid in US dollars for the service done abroad. When the value of rupee goes down, IT companies' share of profit goes up, which increases their chance of making more money and in turn elevates the share price. But the Western countries are experiencing high inflation and low growth. So their priorities may not include IT, and that's the reason why Indian IT companies are slowing down for now. And that's just one of many other reasons. With that said, I don't see the current issues staying for long. In fact, as IT companies fall in price, their value increases, and hence at a better bargain, we must buy them now. Before concluding this video, I'll say this. Indian economy is built on 3 major sectors. Number 1, the banking, financial service and insurance sectors, BFSI. Number 2, fast moving consumer goods, FMCG. And the third, the information technology, IT. So try to invest at least 50% of your portfolio in these 3 sectors. Hope the video is informative. Like, share and subscribe the video. Thank you for watching.